Hello, friends. Let's get right into it. This is our second lesson, October 7th, 2025, using our MTL strategy 2.0. Let's get it. Alrighty then. Here we do the same things as we did before, same things that we consider daily. What trend is it? It's a bullish trend. It's going upward, not downward. So we are in a bullish trend. Let's go ahead and highlight the little gaps that we see, which is going to help us in the future. See if we see any other one. We do. This little one's still here. Let's open. Awesome. Now let's go down to the 1 hour. Let's make sure we're still in a bullish trend. And let's draw out the major trend line. So the major trend line using these two is this right here. So it's still bullish trending, still going upwards, still in our favor. We have it tuned right here at Tuesday, October 8th, because that's when we start looking at the market. So you should be starting at 7:50 p.m. That's when you should be looking at the market. So 7:50 in the morning, you start looking at the market, you go down the daily, look at the gaps, you look at the 1 hour, you look for any recent gaps. Let's see if any gaps happen from Monday to Tuesday. No, but we do see the small little gap here that we are considering on our last video. So let's go ahead and still highlight it. Still hasn't been filled in. Awesome. Now, let's go down to the 15-minute and let's look at what was the most recent divergence between this information. As we can see, there was no divergence to the bottom side at all. It did go ahead and go through our green, but it didn't go lower than this point. So no divergence, it's just been bullish. So the last past divergence was actually over here on the 15-minute, which is the same one that we marked up on our last video for Monday, which as you can see, Monday 9:30 and 9:45 just absolutely destroyed through that small little gap that we drew on the last video for October 6th and just ripped through it. So let's go to the 6-minute and see the correlation happen. Yep, the 6-minute is still active over here. Draw it in white. Let's draw its trend line exactly the way we had it on our last video. Just literally the day before, boom, right under this white. Right under the wick, right here for this candle. As this was our last black followed by white bullish candle, and it was supposed to continue in a bullish trend, but it actually broke out of the trend line, marking a confirmed divergent sell. And this was the little candle that broke out of the trend line and closed under the trend line. So that's our signal marker right there. We're still seeing it to this day on Tuesday, so that's really interesting. We could definitely look to see that we can take a trade off of this, or take a trade off of our 3-minute time frame, whichever is better. Now on the 6-minute time frame, we are going to also draw out our divergence from low to high because it's been bullish even though it did sell. Actually, since it sold for my last day and it went downward, it's making higher lows and lower lows, lower highs and lower lows. Let's go ahead and draw our Fibonacci retracement tool. Our Fibonacci retracement tool is going to be drawn in reverse. because we're looking for a sell opportunity, not for a buy. From low to high, you're looking for buys on the Fibonacci retracement tool. From high to low, you're looking for sells. So here it could reverse at the 0.5, even the 0.618 right above that 6-minute entry, and reverse and then go ahead and give us the win to the bottom side. Let's see now if the 3-minute correlates and the 1-minute correlates. And if it does, then we're looking at a sell option for Tuesday. So let's go down to the 3-minute time frame. We are seeing divergence right now. Recently for a sell, we saw it for a buy. Okay, and then it switched on from a buy right here to now a sell. Because it came from this region right over here to now being overbought, oversold, overbought. That's the history behind it right now. So we will be using that to our advantage. Let's go ahead and draw out the divergence happening between our RSI and the daily chart. It's this right here, basically. From here to here. It's saying, yes, I'm getting ready for a sell. I am overbought indeed, and I'm getting exhausted. Let's go ahead and draw the trend line going sideways, and it's not ready yet to have broken out. As you can see, I'm not trying to eat through this candle information because then it invalidates the trend line. So if I were to tuck it really good to that corner, this is what the trend line would look like. So it still needs a little bit more time to cook and show us an entry for the 3-minute, but it is agreeing with us that it is going to sell on that same 3-minute time frame now. So the 6-minute has 2 steps, 3 actually. You look for gaps. You look for gaps in the most current recent data to see if maybe market might want to go back into that spot. And if you see no gaps, then you look for divergence, and then you look for your Fibonacci retracement tool placing from high to low or from low to high. On the 3-minute time frame, you just look for the same thing happening once more. If the 6-minute says sell, then you're looking for a sell on the 3-minute, and then you're looking for a sell on the 1-minute. Or vice versa, buy, or maybe, like the 6-minute won't say anything, but the 3-minute and the 1-minute will both correlate to buy, and you could be able to take that too. The full rules and of the strategy will be posted on Discord. So if you want to go ahead and join the Discord down in the comment section, and then you're able to join the friend group and also be able to view the rules, the strategy, the P&Ls, and chat with us on the general chat. So going back to this, 3-minute time frame is not ready yet. So we're gonna go ahead and go down towards the 1-minute time frame. On the 3-minute, just before I go to the 1-minute, we're supposed to draw out a range of 60 pips going up and 60 pips going down from 8 in the morning and beyond. So you could take it at 8:03, 8:06, 8:12, 8:15, as long as it's not more than 8:27 in the morning. So here I'm looking for a resistance line, right? That's higher than 60. So this is 32. There's nothing more to our left. And then the next one would be here at 146. So it has to be 60 or more. It can't be lower than 60. Here we draw a line out. We're looking at 55 pips. So now we have to go to the very next one. It is actually right here, or actually right here. Okay, so what I'm seeing is if I draw my ruler downwards and I'm measuring this first floor, it's not quite 60, but this second floor is. It's 91. It's more than 60, 60 or more. So, and this is now the range that we have the market in right now for Tuesday. This is the 8 in the morning horizontal. A vertical line. Let me take it off. Now we have 2 horizontal range lines drawn under the 3-minute time frame. We have the 6-minute Fibonacci retracement tool, any gaps, and what it's telling us, which is a sell. The 3-minute is telling us a sell on the 1-minute. Now we go down to the 1-minute and we inspect for divergence as well, which, as you can see, the 3-minute and the 1-minute don't correlate with divergence. On the 1-minute, this is the highest tip. and it's true on the chart, and then consecutively they're not higher than this point. So it's not considered divergence. So all we have is the 6 minute and the 3 minute telling us, hey, look, this is gonna sell. Now let's wait a little bit longer. And what we're waiting for is basically if it closes, if any candle closes under the yellow and it doesn't give us a divergence sell on the 1 minute, then we take the yellow signal. And then we'll take the black horizontal range level too. And we'll be aiming for the second line on the fib. So 122. 122 pips off the range. And we'll be risking 80 pips for the range. If we take something on the 3 minute that closes really tight over here, then we'll also be risking another 80 pips, but catching the same type of TP. So hopefully we can catch an entry around here and drop it all the way 161 pips down. Let's see if that happens. Oh, what's going on here, gang? So looks like the market wasn't actually done selling, I mean buying, and it went ahead and it bought again. Let's see if it shows us divergence, which it is currently actually. And how is it showing you divergence? All right, well, look, by 9:10, 9:18, okay, now if we open this up, look at how this line on the 1 minute time frame is much higher than this point right here. But when you go down on the chart, it actually continues to grow instead of go down like the RSI is saying. The RSI is saying, hey, I'm overbought. Please sell me. But on the chart, it's still not overbought yet. So it's exhausting itself. Here, we'll grab from this tip, the last level of support, which is this green line. And we're going to draw a new trend line going upward. Right? Now we're waiting because we cannot eat through any candle information like this or this or this. We're literally just drawing a trend line on the 1 minute and waiting for the breakout so we could take a sell. Right now, it's currently on the 6 minute sell of yesterday. So you could take this trade as well if wanted to, if need be, and risk it all the way down to this level. Or wait for the 1 minute, which is what I'm going to do. I'm going to wait for the 1 minute time frame and take that sell. Went ahead a little bit higher, a little bit lower. It's really getting exhausted. I do see the sell coming through. It's just taking a little while, and that's fine. Let's wait for it. And bang. Look what happened right here, gang. Okay, it went up higher, but it got exhausted. It went lower, though, on the RSI. Highest point, lower points, lowest point, lower point, higher point, highest point. Finally broke through with this candle. So now you can go ahead and put a sell limit right under this candle, under baby blue. Okay, I would sell it right here and already be risking 60 pips now because on the 1 minute time frame trades, you're risking 60. On a 3 minute or 6 minute or range, you're risking 80 to give the market enough space to be able to breathe. So 206 pip trade, I would already be in there. And then I would be waiting to see where the 3 minute closes. If the 3 minute closes a little bit lower, then I wouldn't really take another trade because at that point, I'd be in either 1 and 2 or just one trade. Again, I would like to scope it to say that I would stay under the 1 minute time frame and just be catching that sniper rifle entry so that I'm able to just get into the market at the perfect timing. Let's go to the 3 minute time frame to see if it actually broke out as well. And no, 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 yes, it did. So this is where your 3 minute sell would be. So which is the best, most sniper entry? The 1 minute time frame that's slightly higher. It's about 29 pips higher right now. So now we have three confirmations from the baby blue and the yellow and the white that had already told us, yeah, I am definitely going to sell. So we're good. We're looking for sells, guys. It breaks out. That's where the baby blue entry would be on the 1 minute time frame. We sell limit there. Look, it would have gone up, gone back down, entered into this market, and then it would have broke out of the range, which is right here. This trade setup right here. So dual trades yet again. This one's trying to catch 208, and this one is trying to catch 122 to the downside. Now, it didn't activate until this, so let's go ahead and see what else ends up happening. And showing lower lows and lower highs, and oh, I'm sorry. And then with time, it does end up hitting our profit target level of 0.124. So again, we would have won on this trade again using the range as a level. Either you take profit at this level right here after the range, the first line, or the second line after the range. I like to use the range as if once it hits this level, I'm looking for it to within the next hour hit the next black line. So we're looking good on this. This is what Tuesday would have brought another dub. Again, using the 1 hour as okay, it's overall bullish. Let me draw the trend line. If it breaks under the trend line, you could possibly start to imagine that this is going to go way lower, or it'll just bounce back to the upside. But it's nice to have the overall trend is your friend, right? The 1 hour going up, it breaking down, it confirming, yes, I wanted to go out and touch this level. So everything was looking good. You go on the 15-minute, you look at the most recent divergence, whether it be down or up. It was up in this case because this is what the RSI was showing compared to the chart. You go on the 6-minute, you draw it out, you authenticate it. Yes, what I'm seeing on the 15 is what I'm seeing on the 6. And if I'm just seeing on the 6, then where are you seeing it on the 6? Are you seeing it back here? Are you seeing a buy? What are you seeing? But we did see a sell. Then you draw out the Fibonacci retracement tool, so it gives you TP centers and also a gauge of where this trend might fall to and reverse or continue, which is fucking great. Here on the 3-minute time frame, you look for divergence once more. Around 8 in the morning to 8:15, you're trying to draw your range, which is 60 pips above and 60 pips below. Wherever the last level of resistance, these red lines show and indicate either 60 or plus. And wherever these green levels show 60 from the current market price point to 60 going down, whichever level that would be. Even if it's more than 60, then that will be our range level. And then going down to the 1 minute and trying to see the same thing happen on the 1 minute time frame so that you are absolutely getting in on the best entry that you can get, which is a sniper entry. And there we go. All right, friends, these are results for Tuesday. Lots of love. Catch you on the next one.